Hey traders, welcome to Charts and Coffee. Hope everyone is doing well. Happy Thursday. I was just watching a video and we've been talking about Skynet. In fact, if you've been part of the top tier pro system class, you know I refer to the algorithms as Skynet. And we've seen the kind of volatility that dominated April 4th through about April 12th. So a very prolonged period of heightened volatility. Now you might say, Rob, how do we know it's prolonged? What's the difference between what we've seen in April versus what we typically see? And I'll tell you, the difference is usually we have one candle that exceeds the typical 68% probability. So if you're wondering what is happening, tornadoes keep moving. I'm in hurricane country. Hurricanes keep moving. But earthquakes, they just sit and they shake. And that's exactly what we saw for a long period of time. We had that earthquake in the Northeast. Maybe that was the harbinger. So now I'm looking at this very choppy area. Now, what does that? Humans do this, and this is fine. We can deal with human behavior. Human behavior is lower lows, lower highs, trending higher, trending lower, fear, greed. We feel something and we keep feeling it. And that's usually what the market has done, frankly, for 100 years, driven by humans. But increasingly over the last 3 to 5 years, and it will continue to increase, we're going to see the influence of, Skynet. I can't stop Skynet. I don't have to stop Skynet, right? But I do have to recognize when it's dominant. And this is probably the first window. I mean, I'm telling you, college classes should be taught on the price action between April 4 and April 12, literally. Because what you're going to do when you start looking at what that was, that's a lot of algorithmic behavior. Again, humans like to feel something and keep feeling it, whether that's fear, whether that's greed. Algorithms are not the reason for trends. They're oftentimes going to contribute like kerosene to a fire. But when we see that chop, humans didn't know what to do, and algorithms just bounced around in a range. And you can see when they're left to their own devices, just how much the volatility can exceed the normal 68% probability. Now this is starting to look a little bit more like something familiar. What is the now? We're not exceeding. This might be, maybe we'll get 3 sessions in a row where we're not pushing the outer edges of volatility. Now, I will tell you, if you can measure volatility on your chart and take a peek at this, these daily price movement ranges really are incredible when you think about what they're doing. That's the upper edge of price movement range for Wednesday. That's the lower edge. We pretty much touched it right there. That's the wick, and right there. We were contained though. That is a big deal, staying contained there. So that's a really good first step to possibly a normalization of a price action. And then I got to show you this. So we know Skynet's hanging out, and then I see, I don't know how many of you've seen this. You don't need the sound. How many of you seen this? So Skynet shows up in the 4th, and then this happens. I look at this, and all I think about is, give me your clothes, give me your boots, give me your motorcycles. Yeah, when Arnold makes its way down. Unbelievable. So now it's all making sense. All right. Can you believe that? That actually is that's actually pretty incredible. So that's what we've got right now in the broader averages. Skynet, and apparently the T100 is here. Unbelievable. That is really pretty incredible. And that's battery powered. No more hydraulics, I guess. So if we can look at the difference between what happened between those yellow lines and what we're getting now is starting to look like more of a semblance of something we may be able to handle with a little bit better follow through, right? So what's the problem with that chop, Rob? Really, what's the problem? Where's the follow through? Where do you get in? And if we're moving beyond typical price movement ranges, how do you get out? right? How do you get out? So that's the way we're going to view waiting on some normalization. And if the outer edges of the daily price movement range at historical volatility are holding, maybe that might be the spot. We may not get many opportunities at that, but that might be the spot for now as we wait for this volatility to settle down. All right. Okay. So that's what we've got going on right now. We got Skynet between the 4th and the 12th, and maybe they're done. We do have a T100 out there now, and we're going to try to find as best we can. We still have about just a little bit less than half the month left to get some clarity, whether that be from the Federal Reserve. We have earnings. I talked about this being sort of a perfect storm where you've got earnings swirling around. It's a little storm. You've got the confusion about the FOMC swirling around as a larger storm. And then what happened earlier this month? Now we have the geopolitical storm, which is very erratic. So all three of those are converging. And we know how that ended in the movie. We are going to see finally, just all storms dissipate at some point. They can get really ugly and then they'll dissipate. And the easiest thing to do is recognize the storm, recognize when it's dissipating, and it looks like it finally is. All right, so let's take a look at, that's the S&P. Let's take a look at the NASDAQ. We'll just go through the indices. And as always, if you have any questions, feel free to type them on in. Unless that Boston Dynamics video just took your breath away. That's unbelievable. That is, as a child of, some of us saw the Terminator in the theater, or at least when it got to HBO back in the day. And you look at that, you think, wow, what a time to be alive. All right, will it be able to do my laundry and clean my car? That's what I want to know. Is it going to do useful things? Apparently Hyundai's bought a bunch of them. But look, once it can Swiffer my house, do my laundry, fold my laundry, and clean my car, now we're talking. All right. So let's take a look at the NASDAQ here. NASDAQ also, and I know it might be a little hard to see. Let me make it a little bit bigger here. NASDAQ, you see the wick here? You see the wick there? The daily price movement range has contained it. Now, that's not what I want to see. I don't want to see necessarily price action in the extremes. But the fact that daily price movement ranges and price action is really, it's not that daily price movement range has contained it. It's really more the angle to look at it is price movement stayed within its 68% probability. That's what we've been lacking session after session. If things feel difficult right now, if stops feel difficult to place, if finding follow through seems bananas, there's a reason for that. So take a look at the Dow here. The Dow is probably the most bearish of the three big broader averages because it's been printing red candles for the longest, right? It's been printing red candles for the longest. The NAS would be the next best, and the best is still the S&P. And by the way, I don't mind none of us here mind if we have a downtrend, right? I mean, that's okay. Or if we have a deeper mean reversion. We need direction. And this is the difference between focusing on fills and just getting in and getting into symbols that have the potential for follow through, right? So ultimately what we want to remember is it time to short yet? Maybe on a 1 hour time frame. Now it's going to make sense to start saying, all right, if volatility is normalizing and we can see red candles, could we find short-term swings? And I emphasize short-term swings because that means we're opening up the 1 hour time frame. Let me do that here. That means we're opening up the 1 hour time frame. And we're going to say, look, I don't trust this market to follow through for weeks. Tomorrow we're going to have to close out a trend in the sector sequence mastery. We've been in this trend since March 25 or 26. This is the trend that we've been in since March 25 or 26. So there are trending environments, but am I going to expect that from a chart that's just coming back into its normal historical volatility and now is printing not just yellow top tier candles, but red? This is a little bit more chopped. Look at gold. Gold knows what it wants. Gold is green. It's not hesitating. It didn't flinch, right? It's just staying steady. That's a very different environment than what we have on the ES. But because I don't trust that the equity markets are going to continue to head lower, because let's face it, we don't have a downtrend. We have bearish momentum. We have bearish candles. We don't have a bearish trend. Very different than the uptrend we've seen in the S&P pretty much all year long. So please don't confuse 4 or 5 red candles for a trend. It is bearish momentum in a neutral environment. And if we're going to continue lower, the best way to do so is say, look, I don't trust that you're going to follow through longer term because you're simply not a trend yet. But I can definitely see you're bearish. Shorten the time frame, and the 1 hour for me is a really good time frame for that. So places where I have 3, 4, 5 red candles, places where I have even better red momentum, and even places where we have red trend, it's going to start to make sense for short-term swings. So those are things that we can adapt, as we're getting out of the aftermath of that Skynet, April 4 to April 12, we're starting to see the humans come back a little bit, it seems. Price actions normalizing, and we're actually moving in a certain direction as opposed to just staying in a range. And the Dow would be another candidate for that. Now, what about places where we have trends? Because they exist, just not in places that we're necessarily used to talking about from Q1. It's not semiconductors, it's energy. And even energy wobbled because when the broader averages wobble, so too will some of the sectors weighted within them. And you can see energy is wobbled. And this is oil and gas explorers, but it's still more bullish than not, right? One gray trend indicator, one yellow candle indicator, but still more bullish than most things. What about gold miners? Gold's been en fuego. No surprise then, so has GDX. And, XME. This is metals and mining. Take a look at copper. Take a look at silver. And you'll see, and there is some overlap between what is in GDX and in XME. So you'll see that there are places, there are trends. They're just not the places we're used to looking, because what we're used to looking is S&P making higher highs, financials, XLF driving it, NASDAQ making higher highs, semiconductors making higher highs. That's not the world we have now. So unless we have a consistent process, which is what we spend so much time doing in the Sector Secrets Mastery, unless we have a consistent process to say, well, what is moving with a trend now? What is losing its trend now? How do I adjust timeframes to better capitalize on those moves? And frankly, look, I am, as much as anyone, trying to get my sea legs in some of the oddest, roughest seas we saw. Again, one extreme, and we've done this in the mastery, so suffice to say, if we were going to sit here and go back, do I have time to do this? Oh yeah, I do. Let me show you all, because I don't want you taking my word for it. Because I said so doesn't cut it. You might say, Rog, what do you mean? This was so weird. All right, everyone can see the candles were moving beyond the gold and the gray zone. That's a historical volatility study. The last time that we did this was here, right? So look for candles that are exceeding the gold. We borderline did it here, and we can see we did it right there. So when I look back and right there, okay, it's the string of candles, one after the other, exceeding the zone. Now, if we exceed the zone for one session, is it able to recover? Yeah. Trend, crazy candle, trend. And again, crazy is being defined by going beyond the 68% probability of historical volatility. You see how one candle is not a big deal. This 1, 2, 3, 4, 5, and then you have 6 here. 6 candles working like this in a row. That is what I'm saying is so unusual. And you can see it there on the chart, right? You can see it there on the chart. So that's what I mean about waiting to see some normalization, because we had the wild candle, right? And then things just kind of got back to normal. That's what we did not have. That's why the market felt the way it felt and did what it did and seemed so unusual, because it was in fact unusual. All right, so I have questions here about McDonald's. Let's jump into that. McDonald's showed some strength yesterday. Let's see. Where was the McDonald's comment? Oh, bear with me. There we go. McDonald's shows some strength yesterday. Do you think it can move higher despite Tesla keeping the XLY down? Well, XLY also has Amazon in it, doesn't it? Truck guy? It also has, so I don't, this is a downtrend in McDonald's. So it had an up day, and that's no different than what it did on the 9th or even did on the 27th. So those are red meets the gold overall downtrends. No, I do not want to put any kind of expectation behind that move. We've seen, so this is where it's so important to say, well, kind of like what I did with the price movement range. Have we seen something like that before? There's what happened yesterday. Yeah, here and here and here. None of those changed. None of those changed McDonald's stars, right? None of those changed its stars. So I would say I would not make much of it. However, if you are looking for a buy in consumer discretionary, the number one weighted stock is Amazon. This would definitely be somewhere. If we're going to expect continuation, that's what we're looking for. Things like that. All right. Hans says, can the robot trade for you? You know, I'll tell you this, Hans. How many of you have been in the market since, say, the late 80s, early 90s? That's how long I've been in trading. And every now and then, some platform, some program says we can robot trade. And they used to be called robot traders, right? We can robot trade. We can auto trade. I guess the robots are now just called bots. Okay, cool. It still makes them robots. And so whatever iteration of something is going to trade automatically for you has always been out there. I never have. Why? Because let's think about what we need this robot to do. Even automated trading, you know, people talk about AI. AI doesn't teach itself. There are humans that go through that language process. If you've done any study in AI, humans are still part of the process, right? Very much part of the process. So whether it's AI, whether it's bots, whether it's robots, whether it's systems, whether it's algorithms, it's kind of a rehash of the same story. Hollywood likes to keep making the same movie over and over again. Well, it seems that there's a certain part of trading that likes to keep doing the same thing and just giving it a different name. That's why I jokingly call it all Skynet, right? So at some point, there has to be a human that's going to say, this is what you trade. Even to a certain degree, what kind of direction you're going to trade it in. I'm trying to think. Oh, here it is. I learned so much. So how many of you bought TradeStation back when it was a charting platform or even super charts? And when you bought TradeStation, gosh, this would have been in the early 90s. It came with a book. I still look at this book. It's called Trading as a Business. And this pretty much taught me everything I needed to know about what goes into a system. And I remember having lunch with my buddies over at TradeStation a million years ago. And the person who wrote this is Charlie Wright. And there's this guy sitting at the table. And again, this is next to my desk. This has been next to my desk. See, I got my little notes in there, little sticky tabs. This has really been very much a guiding book for me as I develop my own indicators. Because he talks about how to code. He talks about how you could program TradeStation Easy Language. It came with the software back before there were even a brokerage. And he was at the lunch table, and I was just floored because this is the book, and this is the guy that was very much part of how I thought about indicators. There's directional indicators. There's non-directional indicators. Then there's mean reversion within the direction. So do you notice all the different variations? So a human has to sit and tell the robot, this is what you're going to do. The robot doesn't do it. The robot doesn't program itself. Would that get to some point? Yes. Are we there yet? No. So yeah, are the robots going to trade? I love that, Hans. I do not need a robot to trade for me. What I do need is automation. And there's a big difference. Although it's a squiggly little line, there's a big difference. What I embrace in Top Tier Pro System is automation. Let me take the best version of my mind on the proper amount of caffeine and the ideal amount of sleep, and not in any way irritated. Let me take the ideal Raghee, how she would analyze a chart and automate the things that sometimes I may not even be cognizant of, right? There does need to be a certain amount conscious competence, right? When you go through the process. So I ask myself, what is the ideal methodology by which I find support, resistance, support zones, trends, etc. And I automate that. I'm a big fan of automation, huge fan of automation. Am I ready to go quite to the bots? No, no, because there's too many elements that the bot needs to know that still needs moi, that still needs the humans. And I think a lot of times we forget that all these automated things, whether they be robots and whether they be AI, they're not fully functioning on their own. They still need a lot of input from us. And that's the way I look at anything like that with trading. I still need to tell it what to look at. I still need to tell it what type of sort of bot to run, right? So automation to me is still the best way to take a methodology, make it more accurate, make it more consistent, and then I get to have the final say as to what we're trading, which process we're going to use, and then I run that process via the indicators on the system. So I'd rather just make myself a little bit more consistent and unemotional. But I love the question. Yeah, that Boston Dynamics video is something else. As always, gang, thank you so much for joining me for Charts and Coffee. Let's avoid, I saw the question on JP Morgan. Jody, let's avoid financials until that earnings season for financials is out of the way. And I'm not ready for JP Morgan yet, but I do think soon. So let's definitely come on back to that conversation at some point. Be good to each other, gang. I'll talk with you soon.